Craig, from your perspective, should stablecoins be viewed as an investment or simply as a better way to move money?
I think they should be viewed as cash and a way to move money. I don't see them as an investment, especially with the framework not allowing interest payments on those. There's other digital assets that you can also transfer as a form of payment, or you can hold them and then quickly convert them to some type of stablecoin. So having some holdings for immediate, speedy transfers matters for insurance companies and other examples where a fast payment makes sense. I don't think of that as an investment for where you put your money, unless you're thinking of something else. But certainly you would want to hold some for quick transfers to satisfy the speed. Some of the other digital assets, tokenized money market funds, digital T-bills. There's some other assets that would be useful because they're earning interest, and you could transfer them while they're earning interest and earning a yield. So that's kind of a mixed answer, I think.
John, what's your take when investors ask, should I own stablecoins? How do you answer the question?
Well, I refer them to my book, The Intelligent Crypto Investor, where I have a chapter on stablecoins. But I'll give you the TLDR, which is you invest in the infrastructure opportunities behind stablecoins. All right, you invest in the picks and shovels, the companies that are going to benefit by being the rails that these stable coins are running on. And there's a lot of exciting opportunities in that space today. So these take the form of both publicly traded companies. So for example, Circle, the creator of US dollar coin, USDC, which is one of the top stable coins in the world. That's a publicly traded company that you can invest in. And they've been doing this for many, many years. So they have an incredible technology stack. They have a lot of regulatory compliance, which they've prioritized from the beginning. And that is a very, very big head start, as all of these other smaller players are all trying to spin up their own stable coins. It's going to be very hard to overtake them. The second category of investment opportunities would be crypto native companies. So these would be the blockchains or the other crypto protocols, projects, we call them companies, that you can invest in today that are going to most benefit from being able to run these stablecoin rails. So the simple, easy example would be Ethereum, which of course is one of the largest crypto networks upon which a lot of these stablecoin transactions run. Solana would be another one. And so the simple investing philosophy here is we identify those early leaders today, very similar to like looking at the early .com boom and finding, the Googles and the Apples and the Amazons that were creating this massive infrastructure. We invest in them now, again, both publicly traded companies and crypto native companies, and we hold for the long term. That is the strategy in a nutshell.
Lou, how are businesses actually using stable coins today? Not in theory, but in practice.
Depending on the type of businesses, I would say one big category would be businesses looking to accept stablecoin as a payment method if they have clients internationally, especially in emerging markets, or if they have Web3 native clients. So we're seeing increasingly demand from ads platform or cloud platforms. They have big Web3 native clients, not even only in the emerging market, but even in the US and Europe. And those big clients are looking to pay with stablecoin or cryptocurrency. And this is a demand for those businesses to be able to accept stablecoin directly as a payment. And then you have trade businesses. Again, we're coming back to biggest trade corridors. They are looking to leverage stablecoin to make payments cheaper and faster. A very good example recently that I spoke with clients talking about import-export out of Chile to China, for example. So without this stablecoin on-off ramping infrastructure, a Chilean importer holding Chilean pesos, CLP, trying to pay an invoice, even in US dollars in China. If they go to a big bank in Chile, this bank will charge them sometimes over 10% to do the transfer, to do the FX and everything. When if they leverage the stablecoin infrastructure, this cost can be reduced significantly below 1% out of the entire flow. And then in addition to the fact it's going to make the payment faster. So that would be a second type of clients.
Lourdes, can stablecoins make it easier for investors around the world to invest in businesses that perhaps were previously difficult to access?
Yeah, you are very right. Even now, if I want to buy, again, going back to Brazil, Petrobras, it's very difficult for me to do it in separately. I have to do it through a fund that was through an ETF, so something like that. And also I wanted to add something else to what Lou just said, is that strangely enough, as a unit of saving money, of course, the usage is mainly in this country, in Europe, but then as a transaction, cryptos, stable coins are more used in countries like Nigeria or Argentina. Why is that? Because you are a company, you want to repatriate your profits. And again, in Nigeria, the Naira has gone through a major, it's now recovering, but has gone through a major devaluation. So what do? You want to, as fast as possible, because yes, going back to the answer from Craig, if you are paying in dollars, if you settle the payment either today or in a week, who cares? The dollar is the most, or one of the most stable currencies in the world. But if you are paying in Nairas and the payment in a week can be a difference of less, you can lose 50% or whatever. Crypto value has been very unstable as well, and that's why people also are moving to stable coins. But if you can repatriate your profits from Nigeria, you're an oil company, you want to repatriate as fast as possible. As fast as possible is very important, and you may gain a lot by settling today. So then you are using Bitcoin, stable coins, whatever you can do to repatriate your funds. Also, in times of instability, countries put restrictions in how much funds you can repatriate. So hence, the usage of crypto and stable coins, you will be surprised, is a lot in emerging markets, where their currencies are unstable.
Thank you. Let's go to segment 2.